Hello friends, in today's video we are going to talk about the Elliott wave and the Enneagram. If you have not watched the previous video, I made a video on the principles of esotericism, the major components to save you time in your study. So if you have not watched that video, I would encourage you to go back and take a look. It is not a trading video per se, but it will give you a deep background that people will study esoteric thought, mythology, religion, other spiritual concepts and things to try to derive an understanding which helps them decipher what the stock market is doing. So that is where a tie-in between esoteric concepts and trading comes in. You are looking for how the world actually works. What are the patterns that you observe in the world? You will be able to apply those to trading in the stock market because the stock market reflects all of the different realities, or not realities, but it reflects all of the different things that occur in reality. So if people move emotionally in a certain way, then you should see that reflected in the stock market. If economies grow and decline in a certain way, you should see that in the stock market. If you have scientific concepts, that's the concept of natural law, that should be reflected in the stock market. When people say, oh, this movement was based upon natural law, it means that in natural law, if the electrons and the protons and the neutrons interact in a certain way, you should see an interaction that's similar in the stock market. If a plant grows according to the Fibonacci growth spiral, you should see that growth spiral in the stock market. So with those concepts in mind, check out that Principles of Esoteric video. It is just chock full of tons of stuff, but we're going to put this into some practice here and look at two concepts that I personally believe are related, but I don't think that's a common understanding, but the Elliott wave and the Enneagram. So you have maybe heard of both, but if you have not, I'm going to expose both of them to you here. The Elliott wave is a concept of 5 waves within waves of motion. So you can see here that our principal waves are these darker blue waves. The dark blue waves are 1, 2, 3, 4, 5, A, B, C. And I say here that quitters always lose, and losers have to quit. And what I'm talking about, although this is applicable to normal life, if you have a relationship and you give up on it, it has to fail. If you have a search for a job and you give up on the search for the job, it has to fail. But in the stock market, if you give up, you fail. Now, if you've already won and you give up, that's different. You go to Las Vegas, you gamble and you win, and you're smart enough to walk away, take your chips and walk away. Okay, you win there. But for the most part, if you have not yet won and you give up, you always lose. So what does that mean in the stock market? Well, it's talking about capital management. That's my real reference here, capital management. If you give up, you can't make money. But if you lose, you have to give up. So how do you manage not losing? Well, you're going to lose when you trade because the market follows this Elliott wave principle. Let's see if I can find a simpler Elliott wave, so we just talk about the first part first. So the normal motion of the market is this 3 steps forward, 2 steps back. It goes 1 step forward and then it pulls back, and it goes 1 step forward and pulls back, and 1 step forward and pulls back. And this is called price action. And this is also has the qualities, it's heteroscedastic, meaning it goes, you see, they're not all equal lengths and sizes. It's here and it's here and it's here and it's here. So it's going like a fly. It flies on a basic certain rhythm, and you're welcome to go practice catching the fly with chopsticks if you wish. But the fly is flying all around. It follows a certain pattern, but because the pattern is so rapid relative to your awareness, and because the pattern is so irregular from an unskilled look, this A to B motion is not the same as this 3 to 4, but it's the same underlying principle of movement. So if you invest in a stock and it shoots up, it's about here where you want to chase it. And then it pulls back, and so you lose your money. And now when it pulls back, you get fearful, and it just starts going like crazy. So somewhere around here, you say, okay, well, it's going up now. Well, it's going to peak right here, and then you lose your money, and it comes back down. And if you are not profitable in the stock market, it is because you do not understand this one concept. It is this concept right here that keeps a person from being profitable. You are literally operating opposite to the way that you should be. Because when it goes up, you should become fearful. And when it pulls back, that's when you say, oh, there's an opportunity if I'm bullish. Now, if I'm bearish, that's a different story. If I'm bearish, that's as it goes up. Once it pulls back, I say, okay, I'm bearish. I want to get in here because now I most likely have an opportunity to make money on the downside. In a larger uptrend, you don't bet bearish. That's stupid to bet bearish in a larger uptrend. You only bet bearish in a downtrend. But nevertheless, if you are going in this way, as it rises, you become more fearful that there's a pullback. And once you get this pullback, that's when you enter in. But if you bet here, let's say that you put your money in right here at this level, and it goes up and it pulls back, you know, based upon the simple concept of the Elliott wave, that it's going to pull back and there will be a bottom somewhere. So if you bet here, and then you bet here, and the market starts to go again, now you've made your money. And you say, well, how far does it go? Well, that's a different concept. The how far does it go is something that other analysis has to show. Elliott wave is not showing how far it would go. Elliott wave is showing the structure of how it could go. You say, well, but I want to know how far it will go. The reason you want to know the structure is because the market will only follow this structure. It follows a certain structure into the ground, and it follows a certain structure to the moon. So if you see a certain set of patterns develop, you know how the market should go, no matter the way in which it's moving. Okay? Because it's only going to move in this certain pattern. You say, well, it goes up or it goes down. Does this predict whether it goes up or goes down? It does not predict whether it goes up or down. And that's one of the major criticisms of Elliott wave. An Elliott technician will have one idea and an alternate idea, and none of them may work. And then they'll have a third idea or a fourth idea. And these different interpretations of the Elliott wave, the reason that they don't work is because they're not predictive of what will happen. They are predictive of how it will happen. In other words, if the market is going to go up in an impulse, it will look like this. It will look like 5 waves up. If the market is going to go sideways and into this compressed structure, it will have an A, B, C. So it will be 3 waves in a correction. So there's a difference here. There is, in terms of the movement, you can see here 1, 2, 3, 4, 5. This is referred to as an impulse. This is how you move. This A, B, C is how you correct. So when you are coming down in an ABC and people are getting terrified in this big C decline, it's still bullish. But this action here of motion is the 3 steps forward, 2 steps back. 2 steps back, 1 step forward. So you see we took 1 down, 1 up, 1 down. So we have 3 steps here. 2 are down, 1 is up. 1 is up, 1 is down, 1 is up, 1 is down, 1 is up. So you got 3 steps forward, 2 back, and you got 2 back, but 1 up. And this is how people get confused, because just look at the difference between here at the bottom to here. This is all the real action, okay? So if I just put this over here in paint so that I can scribble on it, what was the real motion? The real motion was from here to here. This is your real wave, okay? You can see this is the real trend of the market. This was the route in which the market went, but this here is the trend of the market, because this is the real path. And this is the only gain inside this square that I created here. This square is how much the market rose. This is all just variation and fluctuation. So if you understand this, then you have this same principle and you apply this principle here, because this is natural law. This is what people are talking about when they say, what is natural law? How does the market trade based upon natural law? This is it. I'll explain it in a relationship, or I'll explain it in a job, or I'll explain it in something else, and you can see. In a relationship, you meet someone, then you get to know them, and you find that there are differences, and then the relationship sticks around, and so you really start to develop, because now you can do things, and you're finding your synergies, and it seems like everything is just going to be great, and you're going to keep developing forever, and then their personality is hard in a certain area, and so it stops. And now, if you get over that stopping of the personality, you get even higher, okay? So this is progression in a relationship. Let's say you started a job. You start the job because you got hired. So now you got hired down here, and now you pull back because now you have to do the job. And so everything is great because, yes, I finally got the job offer. And then you have to do the job, and it's less perfect because now you have to get up in the morning, you have to go to work, you have to do X, Y, and Z. So it's less perfect. And then you start making money, and over time you start making money, and you're having profitability, and you're growing, and you're growing, and you're growing, and that's great. And then all of a sudden you have interaction that's negative with your coworkers, and they don't like you, and there's troubles on the job, and it's just the bad times, and so it pulls back, but you're still making money, and then it rises up, and so you have this and this and this and this and this. And let's say that this structure here represents that you get laid off. Let's just say that you get laid off, or the company is having problems, so you get fearful. But then it looks like, oh, it'll get better, and you're still making money, and then you actually do get laid off, and so now you're back to here. So you lose your job, but what did you get? You got all the experience from the job, and you got all the money that you made from the job. So did you gain? Were you profitable in this situation? Yes, you were. And that's the same concept here that I was sharing with a relationship. If you persist in a relationship through any of the troubles and any of the strains, because you have interacted with a person for a long time, that persistence enables you to have more and more rewards. If you persist in your career, even though your career only had this amount of gain, and you say, but I was up here, I was on top of the world. You were on top of the world. But life does not leave you on the top of the world. There's this biblical quote that says, man in honor abides not. Meaning you don't stay in your place of perfect honor and perfect position. And if you think you should, you just don't understand how the world and natural law works. You are supposed to come back down to this, and then you take off in a new wave. So this here, which is C, you're going to get another one of these waves. You're going to get another up wave, and a down wave, and an up wave, and then you'll go to a new level. But you're doing it in this structure the same way that the stock market is doing it here. So be encouraged that quitters always lose, and those who run out of capital, let's say here, or here, or here, or here, or here, if you run out of capital, you have to quit. So I'm trying to get these concepts fully into your mind. For those of you who are not familiar, and I'm sure some of you are familiar, and if you are familiar, you've probably already left by now, so thank you for staying with me if you're with me. But this concept of 3 steps forward, 2 steps back, 2 steps back, 1 step forward, this concept gives you the structure. Now, I said Elliott wave and Enneagram. So let's go back here to the Enneagram. So I referenced the Enneagram in the Principles of Esotericism video that you will see there if you go back. But this is the Enneagram, and this man here, George Gurdjieff, is the one who is responsible for bringing it to Western thought. This Enneagram is the same concept as the Elliott wave, because if we switch back to the Elliott wave, you'll see here in this one that there are waves within each of these waves. In other words, there's a small wave, there's 5 small waves that makes up this primary A. So you could say this is an intermediate wave, these ones are intermediate, and they make the primary wave, and then they decline and they make the smaller wave, which is corrective. So the 5 waves are impulsive, they get you to go a certain way, and the 3 waves, ABC, the ABC wave is corrective. It just corrects, it's the pullback from the impulse, but it is not actually going to change the trend by itself. And you can see here when we get to 5, we go impulsive down, we go corrective back up, and then we go impulsive down. So George Gurdjieff has the same concept here with the Enneagram. The Enneagram's inside the Enneagram, inside the Enneagram. This is the concept too about the variations, wheels within wheels. But it's the same concept, just a different picture. You get these variations. So if you were to look at this triangle here, the 3 and the 6 and the 9, they are not within these cycles of variations. You get 6 points here of variation, where if you're at 1, you could go to 4, for example, and then 2, and then 8, and then 5, and then 7, and back to 1. But the idea is that 9 is giving you a pressure, so you're going a certain way. 3 is giving you a pressure. These are the forces. Now, these are also the esoteric concept of the forces, the 3, the 6, the 9, and the triangle that you see, the all-seeing eye and the triangle, then you see on the back of the US dollar bill, or if you follow the esoteric video that I just explained, it gives more background into these types of concepts. But as a practical for trading purposes, this Enneagram is telling you the same concept of the Elliott wave. That something, if you were going just around the circle from 1, 2, 3, you wouldn't go around the circle starting at 1 and go to 2 and then go to 3 and then go to 4. You would go from 1 to 4 and then you'd pull back to 2. And then 2 wouldn't work because you'd say, I need to go from 2 over to 5, but you can't get there. You can't get to 5 because there's a gap here. So you have to go around and get to 8. And then when you get to 8, you'll go to 5. And when you get to 5, you go to 7. This is the human path. Okay, this is how we move. And this is maybe a little more concept than looking at the Elliott wave. That's why I showed you the linear structure of this Enneagram path. But the concepts are exactly the same. That you are not taking a straight line. You say, I want to get from 1 to 8, in this case, because 9, 6, and 3 are not part of the structure. You say, I want to get, they represent the forces that are generating movement, but they don't represent movement itself. The 1, 2, 4, etc. They are the actual path here, but they don't go in a direct way. So if you move around this circle, you say, I want to go 1, 2, 3, 4, 5, 6, 7, 8, 9. You can't do that. You have to go 1, 4. And that's the same thing with the Elliott wave. You have to go, you say, I just want to go straight up and stay there. Well, you can't. You have to go up in 1. You have to pull back in 2. But you see, in your pullbacks, just like in here, within the Enneagram, there are smaller cycles. Just like within the Elliott wave, there are smaller cycles. So how does this all get back to trading and price action? Well, quitters always lose, and losers have to quit. So it means wherever you are in the cycle of investing, you have to have enough capital and enough time. I'll say this again. You have to have enough capital and enough time. If you have enough capital and you have enough time, then when you go to invest, let's say that you invest, let me change the color here to red so we can see here. Well, that'll work, but that's not the color I'm looking for. Let's go over here. Let's say that you invested here. And did this work? Well, don't know yet. Let's say that you invested here, you start riding it, and now it pulls back. Well, you're in great shape, unless you panic, so you sell out here and it takes off. Well, if you have enough capital, you're going to be correct here. But let's say that you don't understand your time frame. So you just let the stock sit there, it goes sideways, you get irritated that the stock is going sideways, and then it pulls back and now you're down here. What do you do? Well, if you're going to start another 5 wave, or this one segment here, let's say you're going to start this segment, here's your 1, and let's say that you're going to start your 1 and you're going to do the same thing, back up, and then you're going to have your pullback again, because that's how this works. 1, 2, and then 3. 1, 2, 3, 4, 5, A, B, C, down. Here's your correction. Now we go up 1, 2, 3. You started investing here. It came up, and then it started to come down. It refused to go higher. If you stayed greedy here, well, you just watch your profits, lose, and then pulls back to here. You get fearful and you sell out. Quitters always lose. So if you sell out here, you miss the next run. So how much capital do you need? And I can't tell you what to do for yourself exactly, but I can tell you that you always have to understand the relationship of this structure. Because this structure of the Elliott wave, although it has certain rules, and I would encourage you to find them, this structure, as far as price action trading, is going to tell you exactly a structure that you would hold capital for. So let's say that you get in, here on B, or let's say that you get in right here on 5. This is the worst place to get bullish. If you're going to go bullish here at 5, you bought it right here, and now you fail. You bought at the exact high of the market. And I showed a previous time where I bought at the exact high of the market on a bullish spread, and I showed how I defended that spread. How much capital did I need if I was correct? Well, I needed capital here to buy back in, because I don't know this is a B. I just know that this was a bottom. So I increased my capital here, and now my break even between these 2 points was from here to here. So my break even's here. Okay, but let's say I'm wrong, because now B, it went down even further. Well, I needed more capital. So now I have to put more capital in, and I go from here to here. So now where do I need to go from? Well, if these are equally weighted, let's say this was $100, this was $200, this is $400, and if they weren't, then the ratios change. Then my break even now becomes here. And if you remember, what we were looking for was, we were looking for a new A, or a new 1, because here's our 1, and we were looking for a 2, and then we were looking for a 3. So if my new entrance point, because I did it wrong here, I did it wrong here, I did it wrong here, and I did it, here's my average weighted entrance point right here, well, look at that. I'm in great shape. I'm going to make money. Because you see, quitters always lose, and if you lose enough, you have to quit. So if you put all your money in here, and it goes down, you're in trouble. And if you panic and you sell out, you just have a loss. But if you don't put all your money in, and this happens, well then, you're okay. But let's look at this another way. Let's say that the market, instead of, you saw a 5 wave before, and I just wiped everything out. Let's say that you think that same pattern is going to happen. So you bought here at the top, and you're wrong, and you increased your bet here, and you increased your bet here. Well, what if you're wrong? What if it goes just like this, and then it goes into the ground because your 5 wave happens here? Well, do you still have enough capital for four times? Okay? Do you still have enough capital? And this is what I love about spread trading. I say I'm a vertical spread trader. This is the whole concept of price action trading for my spread trading. I obviously I don't try to get in at the top. I'm trying to find a bottom and say, okay, well, this is the bottom and it's going to go up. Now, if I'm bearish on something, I am trying to find a top. But if I'm bullish on something, I'm trying to find a bottom, and I'm trying to say, do I have enough money to calculate that I need 3 or 4 attempts? Because on this attempt, we've got a 5-wave down. We're now going to have an ABC up. So you would go from this. Let's see if I can pull this over. I don't know that I can. If I just pull this over. Nope, I can't. Okay. Cut. It's going to mess everything up, but we'll get the idea here. Let's just... You're going to go back up as an A, a B, and you might go up in a C. So now, if my break-even point was from here to here, and then my next break-even point was from here to here, and then my next break-even point was from here to here, my risk is here to here. This is a corrective wave. This is not impulsive. It means we came down, we're going up, and the next thing that's going to happen is a 5-wave down. So we're going to go down 5. A, B, C. Or not A, B, C, excuse me. 1, 2, 3, 4, 5. But let's say I don't know this. I don't know that we're going down. I need a red line here because you can't see it in the black. But I think you're getting the idea. I thought it was going to go up, but I was wrong. So I bet 4 times here. I got out on the correction, and the correction was about 50%. So since I got out on the correction, that is what enabled me to get my money back and say, you know what, this was a bad trade, but I got my money back. Let's be done here, because this wave doesn't look like it's going to the moon. It's meandering, it's going sideways, it's taking its time. That's not an impulse. Impulse is like this. It goes up. When it goes, it's strong. It's strong and it moves. And if you see, like, messing around here and going sideways and not really doing anything, and you're saying, you know what, I've tried a couple times and my trade didn't work out. I don't want to do this. Well, then that's a good time if you've broken even to say, let's take another trade. So that's what I'm doing in the price action trading. And obviously, still trying to be right. But if you're not right and you know that there are certain numbers of time here that you have to try again, and you have the capital and you have the time. In other words, if you're trading options and your options expire, well, you lost, so you had to quit. So hopefully you have more capital. That's why you don't put it all in one. I mean, if you're not, like, if I was really not sure about something, I would buy a long-term option if I was buying an option, because a long-term option at least gives me time to be right. But I try to trade spreads because I like the dynamic of how a vertical spread trades. You can basically block out this risk and just trade it here, or just this risk from this price to this price, and that's the only risk. It's from here to here. So let's say this represents 500, this represents 500. So I can increase my risk by defined quantities, just like you would with stock, but I can only ever lose the amount of risk that I put on. I'm not on the hook for the entire price of the stock. I'm just on the hook. I win or I lose within this narrow range. So I hope this expands your knowledge and gives you some idea of how the price action works and relates. As I said, the Elliott wave and the Enneagram, they are the same kind of concept here. There is a book where Gurdjieff brought this, but I would not really recommend the book. The book is called, and I have read a lot of it, but the book is called Beelzebub's Tales to His Grandson, which should give you, it's called All and Everything, or Beelzebub's Tales to His Grandson. It's a horrible read. It's terrible. It's just awful. And it is a waste of time. If you're looking for the esoteric concepts and you want to discover that there is a deistic absolute God and that Lucifer is a knowledge bringer and all the rest, then yes, go ahead and read Gurdjieff. But if you're just looking for stock trading, I'm saving you time by telling you how this works instead of slogging through his ponderous and onerous and just gargantuan mess of knowledge that's just leading you usually nowhere. When it comes to George Gurdjieff, the reason I say I don't recommend reading this Beelzebub's Tales to His Grandson is because if you read this right here, Gurdjieff went to great lengths, and he says this himself, he went to great lengths to increase the effort needed to read and understand his works. He himself said, I bury the bone so deep the dogs have to scratch for it. There's also another quote where he says he didn't just bury the bone, he buried the entire dog. So the point of this is he is another one of these esoteric teachers who wants to waste as much of your time as possible. And I personally regard that as an awful, evil, negative thing. So I do not recommend that you spend too much time learning from those who are telling you overtly that they want to waste your time, they're going to hide all the concepts from you, and they would like you just to spend your entire life searching through their slop. And a lot of this is filler and slop. So just buyer beware there. And think about this in a larger perspective. We'll apply natural law so that you have this understanding. You have to spend time for things. If you are someone who pulls 10 seconds from this part of the video and 10 seconds from this part of the video, you don't have enough ability to just stick with something so that with attention so that you can get the actual concepts. Then if you're also trading and losing, you have a connection here. You're bouncing around, you're changing your mind, but you're not ever sticking with anything. If you don't stick with something and you bounce from relationship to relationship and job to job and in and out of trades and you skip around the video looking for just the special key thing, well then you're not going to get it, because part of development is the process. But at the same time, you don't want to waste time. And I try to make these videos as quick and concise as I possibly can to convey these points, because I don't want to waste your time and I don't like my time being wasted. And I am very impatient when it comes to knowledge. But here he says, I'm going to hide this from you. I'm going to make it as hard as possible. And as I said in other videos and in another part of this video, the concept is you'll get shreds of useful information. You'll get all of this theoretical stuff and all of these personal stories and whatever else. If you have a telemarketer call you and they interrupt your dinner, they say, "Oh, we know your name. Here's your name. Can I talk to this person?" You say, "Well, who are you from?" And then they don't want to reply to you, and they want to stretch the time out, and they want to waste your time. And so you don't have a positive view when a telemarketer calls and interrupts your dinner. You don't have a positive view when someone is trying to waste your time. Or let's say you're buying a car and you're trading in a car and you give them your keys, and then they don't want to give you your keys back because, oh, well, we're looking at this and we're looking at this, because they want you to stay and so you can buy another car. And people, or these ads on YouTube or whatever else, they tell you, we're promising you this and we're promising you this and we're promising you this, and we never deliver on anything. And so think about that process. In every one of those three examples, you probably think of that other person as evil. And here is another example from Esoteric Teaching. And I said this, the same thing with W.D. Gann. This is where you spend 10 years of your life, but you don't get anything. So, caveat emptor, buyer beware. And I'm not trying to waste your time in this commentary. I just want you to understand these traps are all over the place, and people are overtly rubbing in your face that they want to waste your time and your life. And so I hope that you will avoid that in your own sense of self-preservation and advancement. So if you are just looking this for the structure of how it works, I will save you the time there. The same thing, there's another gentleman, P.D. Ouspensky, who has In Search of the Miraculous. And his In Search of the Miraculous mostly does not cover what you're looking for in the stock market, but there's like one little comment here, one little comment here. I have largely summarized them, though. This is the concept of how this works. So if you'd like to learn more about the Elliott Wave theory, you can find all kinds of free resources online. I actually think if you sign up for Elliott Wave International, which might be here somewhere, but Elliott Wave International I think is free. Let me see if it shows up, because I remember logging into something. I think it is this. Yes, I think there is if you create a free account on Elliott Wave International, I believe, and I have an account, I just don't know what it is. I think they have a free training on Elliott Wave in here. You could, they may have changed it, or I may just have this wrong, but I think if you sign up for that, they give you free training. I'm not associated with them. It has nothing to do with it. But if you do not know the rules of Elliott Wave, like for example, if you do not know that a Wave 3 is often the longest, but can never be the shortest, if you don't know that, then you would benefit from learning the rules of Elliott Wave. Elliott Wave is not predictive, but Elliott Wave does have, it tells you the structure of how the market will move when it starts to move, and it is an easier doing of this concept of the Enneagram. You see here, the Enneagram is in the current times being used to talk about how people and their personalities relate to each other. So there is more that you could go into if you have interest in discovering how personalities relate to each other, etc. But as far as stock trading, I am looking for the motion of these things, and I hope this has brought you some greater understanding and an idea of how price action trading works, and how cash management is really the big part of winning. So, with all that said, best wishes in your trading.